Doge market cap increases by $600 million as coin rallies 10%. The market capitalization of the first cryptocurrency spiked by $600 million as the coin rallied by 10% in the last 4 days, following the general recovery of the overall altcoin market, according to CoinMarketCap. As the chart of the meme currency suggests, it has once again reached the major resistance point of the 21-day EMA, which I've been saying in my past few videos, which has failed to break the last 3 to 4 days, or 4 times rather, because of lack of buying volume. Yes, guys, we need to continue to apply buying pressure so the price can continue to push up and break past these levels of resistance. Now, it says performance in the last 300 days. Doge still has a positive year-to-date performance with an approximately 100% increase since May 2021. So obviously, guys, if you would have invested last year around this time, you would still be up a whopping 100%, which is basically a 1x. So if you would have put $1,000, you would have $2,000. That's still not too bad considering it has dropped about 80% from its all-time high. So there's still a lot of people in profit, guys, regardless of it dipping from its all-time highs. What's good, family? This is your boy Jaime G. We're about to drop it like it's hot, baby, and find out what's going on in the wild, wild west of crypto land. On my channel, guys, I talk about Doge and overall crypto market news. Now, remember, none of this is ever financial advice. It's just your boy sharing his thoughts and opinions, nothing more, nothing less. Please never take it as so, because if you do, well, you're a big dum-dum. I'm joking, guys. Then your ass is in a whole lot of trouble, guys, because I'm definitely not a financial advisor. Now that we got all that good stuff out of the way, now let's dive into into some stats and see what's going on in the markets, and then we'll get into some more Doge news here in a second. All right, guys. Now, good old Grandpa Bitcoin is down 1.5%. Oh, down 1% for the day, sitting at 41,587 with 80 cents. Not too bad. It's okay, guys. Obviously, it's pulling back, but nonetheless, we are still in the 41,000 range, which is good, right? That 40K is basically the line in sand, if you will, right? That's the crucial level of support that we don't want to go below. But over the whole weekend, right, we've been staying above 41,000, so things are looking good. There is resistance around the 42K level. So if you see, we went up to about 42,300, but nonetheless, we kind of got rejected and came back down. But we are kind of just ranging in between, 40 and 42,000, right? Anyways, as you can see, right, there is pretty much more red than there is green. Granted, it doesn't surprise me. It is Sunday. It's the weekend. There's always less trading volume, more volatility. But nonetheless, guys, it's obviously everything is just pulling back, which is okay. We need healthy pullbacks and corrections. Why? So that the assets can continue to push up. Now, all right, guys, enough of all that. Let's dive into Dogecoin. We're still number 13, guys, on CoinMarketCap. We're down 3.3%, guys. We're sitting at 0.1194, basically almost 12 cents, guys. Now, our market cap is sitting at 15.84 billion, and our trading volume is at $457.49 million. Now, just like how they mentioned in this article, right, we are definitely back at this 21-day EMA, right? Let me bust out the chart here. Give me 1 second, guys. It erased, so give me a second here. Okay, guys, so like how that article said, right, that we have reached that 21-day EMA once again, guys, and we obviously got rejected. I'll show you here in a second. But, guys, I truly believe that we are still in a uptrend now. As you can see, I've been showing you guys this falling wedge, right, which obviously signifies a trend reversal, which is a bullish technical, right? We've been in a downtrend for quite some time, and it ain't no secret, right? Everybody knows, right? Now, but nonetheless, guys, I just want to briefly show you again, right, that we have broke out of this this falling wedge to the upside, and we still continue to push up. We're not making crazy moves to the upside, but nonetheless, we are pushing to the upside, which signifies that we are now in a trend reversal, and we are in an uptrend, as you can see. Let me get my scribbler ribbler here, guys. Thank you if you're with me on this Sunday. I know you got other things that you could be doing. So as you can see right here, right, guys, we're definitely in an uptrend. We got 3 confirmed green daily candles, to me, that confirms just the seal on the deal that we are in an uptrend, in my opinion, anyways. Now, let's talk about this 21-day EMA that they're talking about, right? That in the last 3 to 4 times that we have came to it, that we get rejected, and they are correct. This 21-day EMA is a very strong level of resistance. Now, as you can see here, this red line, right? This red line here, open it up really big for you. That's the 21-day EMA. And as you can see, right, we got rejected right at the tip of it, right? The candle is right on these green dotted lines, right? So you obviously can't see it. But yesterday and the day before, we had broke above it. That's why I said in my previous video was don't count your chickens before they hatch, that I wanted to see at least 1 to 2 days of candles either on support or above it. But as you can see here, we're like in the middle of it. We weren't necessarily per se above it, right? So those don't count. We need to see at least 1 to 2 days above it to truly confirm that we have flipped the trend and made reversal into support. So this is still a good level of resistance, guys, that is coming in at 0.1202, basically 12 cents, right? And right now we are sitting at 0.1192. So we're just a little smidget underneath this 21-day EMA. But nonetheless, guys, it is a very strong level of resistance. We do need to continue to have buying pressure. We need pressure, right? We need bulls to continue to apply pressure to the bears so we can break past this mother biscuit and head to new all-time highs. Now, support, guys, is still coming in at 11 cents. So now that's what I had as far as the charts go, guys. Any questions, feel free to please let me know down in the comments. Now, let me get into some more Doge news before I get into some overall crypto market news. Now, where's my other article? Okay, here we go. Now, it says Dogecoin struggles to reclaim 12 cents high as it risks further decline. Now, it says if the bulls overcome the 21-day EMA, the altcoin will regain the crucial resistance at 12 cents, obviously, and make it into support, right? At the same time, buyers will be attracted if the altcoin rises to the high of 17 cents. However, if the altcoin turns away from the moving average, the cryptocurrency will fall to a low of 10 cents. I believe 11 cents because that's where our support is, right? I don't say cents, so I disagree with the 10, but you take it with a grain of salt. Now it says, however, a break and close below the 10-cent support would mean the resumption of the downtrend. However, if the bulls defend the 10-cent support, Doge will be forced into a trading range between 10 cents and 12 cents, where we're currently at now, guys. In the meantime, the cryptocurrency price is fluctuating below the 21-day moving average. Excuse me. It says Dogecoin is currently in a uptrend, like I said, right, in my previous video. But it is encountering resistance at the high of 12 cents, which is where that 12-day or 21-day EMA is, guys. And obviously the bears are applying pressure, and the bears and bulls are duking it out, right? We just need the bulls to slap these bears upside the head. It says a rise to the previous high is possible if the current resistance is broken. Meanwhile, the March 17th uptrend has shown a candle body testing the 38.2% Fibonacci retracement level. The retracement suggests that Doge will rise to the 2.618 Fibonacci extension level, or 13 cents. Now, I agree with all of this as well, guys, minus the 10 cents, right? 11 cents is our support. Now, if we can't hold 11 cents, then yeah, we are going to definitely be in a confirmed downtrend again. But in my opinion, just like they said here, and I've been telling you guys, that we're now in an uptrend, right, guys? And I proved it, with my opinion anyways. It's showing you on the charts, on, breaking out of this falling wedge, right? So we just need to break this 21-day EMA, like I've been saying, guys. Now, that's all I had as far as Dogecoin news goes, guys. Now, let's dive into some overall crypto market news. All right, team. Come on, close up. Where am I? Okay, right here. Now, it says Fidelity executive says crypto markets forming setup identical to commodities boom of the 90s. Now, it says in a new interview with Real Vision founder and macro guru Raul Paul, Christopher Tyrers says that crypto markets are setting up the same way commodities did decades ago. People are asking if crypto is a real investable asset class? Does this have a place in traditional diversified investment portfolio? These are questions that went through the commodities 20 years ago, and now, and and we know now that pretty much every managed portfolio has some allocations to commodities as a diversifier. So obviously, guys, what they're basically trying to say without saying is, right, we are in the beginning stages of people of crypto, right? And being possibly going into mainstream and main adoption, right? People have a lot of questions. They're curious, right? Because of the volatility. Like, is it worth, the risk to reward? Is it worth investing in cryptos? In my opinion, yes, it is, right? But this is where commodities were, guys. So, and that's where the internet was. Back in the early 2000s, that's where mobile services was, guys. A lot of these good investments, right? Assets rather, such as mobile and the internet and commodities, everything goes through this, right? They're growing pains, as they say, right? And investing. And that's where we're at. We're in growing pains. Because why? Because we're in the beginning stages, right? But once we get into adoption and more and mainstream, right? There'll be crypto will be less volatile, and it'll be basically like an investing in the stock market. And then he went on to say, prior to the early 2000s, most investment portfolios didn't have an allocation to commodities. Just like right now, most people don't have crypto allocated in their portfolios. They were really corporate hedging markets. Then we saw a series of what I would call product regulatory market access and infrastructure developments that laid the foundation and enabled institutional participation. Now, what's going to enable institution participation down the road, guys, for crypto is regulation. And once Bitcoin becomes more eco-friendly, and like Kevin O'Leary says, right? Because Kevin O'Leary is trying to lay down the groundwork for us, right? Not just him, but there's other people. But like he keeps saying, in about 2 to 3 years, crypto will be regulated. Bitcoin will be eco-friendly. Therefore, you'll have trillions of dollars pouring into crypto, and we'll definitely have a $500,000 Bitcoin in about three years from now. That's why I tell you guys in every single video, the sooner you start investing in crypto, the better you will be financially in 3 to 5 years from now. Remember, it's not financial advice. Now it says fast forward to today, and I think that's where we are with digital assets right now. It says, and I'm going to close out with this. And it says from 2000 to 2002, there's pretty much no institutional investment into commodities. Then from 2003 to 2010, in that 8-year period, we had around $400 billion pour in. Now that's the same thing, right? Now in about 2 to 3 years, like Kevin O'Leary says, trillions of dollars are going to pour into crypto, guys, and I truly believe that, right? I think we're going to blast off to the moon. Now, excuse me. It says Bitcoin options metrics suggest more traders are taking bullish bets. Why? Because obviously, guys, people are bullish on crypto. Why? Because they know that it's volatile and the price is going to go up and down. You just got to be able to stomach it. But regardless, in the long term, guys, things are looking bullish. Yes, in the short term, at times things look bearish because of the volatility, the price swings, but nonetheless, Bitcoin and cryptocurrency is here to stay, baby, and it ain't going nowhere, right? And I just want to touch on that one. Now I'm going to close out with this one right here, guys. Just another bullish article. Now it says $1.8 billion worth of crypto leaves market as Bitcoin breaks through resistance. The large outflows hit the cryptocurrency market as $1.8 billion worth of Ethereum, Bitcoin, and Tether left the market. We could tie such a strong outflow to the extreme fear on the market. Now, this is obviously bullish, guys. Why? Because when people outflows, right, is when people are taking their cryptos such as Bitcoin, Ethereum, and Tether in this article off of exchanges and putting it into their cold storage wallet, which means that they're going to hodl and they have no desire to sell in the near or the near to short term to sell it, right? Maybe in the long term. But what I'm getting at is because they're bullish on cryptos and they believe that the price is going to go up. That's why we have $1.8 billion worth of crypto. You know what I mean? getting pulled off of exchanges. Why? Because these people know that there's going to be money to be made in the long term. Well, guys, this is what your boy had for you on this Sunday. Hopefully, it was informative, useful, helpful. If it was, please consider to like and subscribe. That's all I ever ask for. Please, guys, you guys stay safe, stay blessed. Until tomorrow, your boy Jaime G's out. Peace.